Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall, and today's episode I have with me Jack Boudreau from usehabits.com. Jack is ex-JPM and ex-Techstars, and he is the CEO and co-founder at Habits. It's a marketplace where Henrys, DINKs, and young families find their financial advisor. And I love the acronyms because anybody who's not an advisor listening to this will be like, what is that?
Yeah, I think I've heard like Alice. I've heard new acronyms come up probably like every few months at this rate.
That's so funny. Like, I'm going to have to keep up with these two. So we were having a little bit of a conversation in the pre-show because I've been really interested in like what you're building with Habits, and then in particular, what it's communicating around the shift in client acquisition that's happening. I think everybody's been seeing this, especially like the pandemic really changed a lot of things in consumer behavior, but just talking about kind of what you've been seeing through the platform that you're building, and just trends in client acquisition for advisors. But I think probably to tee that up for people who aren't familiar with what you're building, could you explain a little bit about what Habits is and just the basic mechanisms of how it works for advisors?
Yeah, it's super simple. So we're a marketplace, right? You got supply, you got demand. Supply just being, really world-class financial advisors based here in the US. Then the demand side being predominantly 25 to 45-year-olds. They're often looking for their first financial advisor. We often see ourselves approaching or getting in contact with, the doctors or the attorneys or the young families. We jokingly say they have this DIY expiration date, right? Or the oh crap moment that more internally we talk about their first house, their first kid, getting married, getting engaged, equity comp for the first time, right? They're finally recognizing like, hey, this advice from influencers that I get, these, these like DIY tools or personal financial management applications, like it's not really enough. Like I need the advice. And so how it works is super simple. We get their name, their information. We verify that they're a US human being, whether that's by their social security number or their driver's license. We get the nuts and bolts of their balance sheet and really the intent. And the beautiful part of this is like the algorithmic matchmaking, which, advisors, they have their own criteria, but really the key differentiator about Habits versus all these other lead gen or marketing platforms out there is the conversion rates. So on our platform, the conversion rates are beyond 25%. We have some advisors who convert 100% of all opportunities that get sent their way. And the idea here is trying to reformat the way that advisors approach getting in front of either new or younger audiences. So let me kind of pause there because I feel like I just almost kind of word vomited on you there, Catherine.
No, and I think that's a good cue because something like we've had a number of people on the show talking about like marketing and brand positioning and niching. Like we've had a couple of episodes on niching, and I haven't had very many episodes on client acquisition yet. So I wanted to talk through kind of how you've thought through this with the platform that you have, because I think in a lot of ways it really dovetails with a lot of what's coming out as, the advice of the day, right? Like have a niche, have specific pain points that you address. And I think for a lot of the younger advisors, finding that, I like working with the doctors, or, I like working with people in tech who have stock options and equity things that are weird, or, I like working with, like I had one guy on where his niche was working with single earner households.
Yeah.
So when you're running a practice and you realize that you have that niche particularity, and then if you can get onto a platform that's got the volume of traffic and audience, that's where that sings, right? And that's where, I think when you're talking about these really high conversion rates, is that what you've been seeing? Like, I'd love to hear more, kind of the experiences of, some of the advisors who have been on and just some of the trends that you've been seeing with that.
Yeah, I'm actually going to start with the latter, like the trends. Like the one thing that we see time and time again is that if somebody's between the ages of 25 and 45 and they're looking for their first advisor, they do not care about the brand or the logo or like the jersey on the front, right? So the Fidelities, the JP Morgans, the Citis, like to them, it's almost totally commoditized. Yeah. But they care a heck of a lot more about the name on the back. Like they want to work with Catherine, like they want to work with Jack. They really like identifying as having a customized, incredibly intentional advisor who knows their entire story. They're not calling an 800 number. They're not
Yeah.
just another, name or a number on a spreadsheet. And I would even go to the extent more specifically by articulating they want to have a customized journey.
Yeah.
So, and that trend is something that I think is probably pretty obvious. So like, just to talk about this demographic, right? They grew up with intuitive technology. They're very comfortable with online communities. When I go shopping for paper towels, I have like 30 options, right? Whether that's just on Amazon, going to Walmart, or maybe I just want to go to the little, bodega, at the bottom of my building, right? And when you think about financial advisors, and historically, the marketing has been the same for Gen X, baby boomers, and they're imposing that on this younger generation of like, here's how to leverage a Roth IRA. And, here's the unique way that, I helped this family or that family. Like all these are great mechanisms and they can work for your particular niche. But what we've noticed about this generation is they have to feel special. And it's really hard to feel special when, you're not trying to customize and you're trying to generalize.
Yeah, because I feel like I really like that because just what I've seen is there's these certain things that are going to be commoditized services, but then once people break out of that, it's the exact opposite. Like they don't want something that smells commoditized in any way whatsoever. And it really does turn into that. No, I want you. Like I want the person. Like I'm not buying from a company, I'm buying from you. And especially for something like financial services where it is so personal and touches it touches everything in your life, that really switching to that kind of model, it's just the way that people are making the decisions. So for advisors that are like interested in leaning into this, beyond just, check out the website. What you guys are doing.
Like what shamelessly plug habits on another window, but I
see where like what are things that you've been seeing work for people, with the way that this has been changing?
Advisors who have a very, very clear process. So one of the key questions that we ask in our interview process is like, hey, take us through the first 6 months journey. Because candidly, that's kind of the worst part of the family experience. It's when they're giving all their statements, you're doing all these intakes, there's multiple meetings. It's a lot of families kind of probably repeating a lot of things that they've said to, their spouse maybe, or, things that they have already had to discuss with tons of other people prior to that conversation. And, you're opening new accounts, you got to sign paperwork. And so it's like, all right, take us through those 6 months. And the people who know where to dot their I's and cross their T's and have such a clear, simple, and intuitive approach, that is undoubtedly I would even, if you don't have that, that's not a recommendation. I would call it a prescription. But the second part to that too is you really have to have your business model nailed down. But when I say that, there's got to be a little bit of flexibility. And this is where it gets a little bit gray. But I often see advisors, not only on our platform, but in the 1,500 plus that I've met along these years of building habits, the ones who are most successful are the ones who have like an AUM, of like some sort of flat fee, hourly, or one-time plan. They have a menu. So when a family comes in or an individual comes in, they feel like they're in the driver's seat at all times because they have this clear process that they know how to do this and that. But more importantly, they're choosing that journey, whether or not the advisors kind of architected it in a particular way to get them ultimately to that, spot that the advisor is looking for from a client acquisition or a lifetime value proposition.
Yeah, no, that's a really good point. And it's funny because the timing on this, when this episode's coming out, I just had an episode before, but I think it's actually going to launch a lot earlier talking about that, of just like how important it is to have your marketing processes really tight, but have that initial intake process really, really, really tight. Like that's where people feel, most of the psychic pain.
Yeah.
So in terms of like when you've seen generational changes, because I think we're going through it, a pretty massive shift now where a new generation of firm owners is rising up. And, I'm seeing a lot of things change in the industry just based on that. Besides, it more being a personal brand thing, it more being, people are expecting a really tight process. They're expecting a lot of communication. They're not expecting things like I just had somebody the other day who works for advisors. He was talking about how he was more on the compliance side. And he was saying like, I had he was talking to an advisor and the advisor said, I take every prospect out to lunch and dinner. And he was like, as a younger guy, he's like, that's not appealing. Like if I have like a night off where like my wife and kid, like I can get away from the kids with my wife. Like that is the last thing I want to do. Like, I'd much rather just like submit a jot form with information, and it's so funny, like that disconnect. So in terms of like the younger generation of advisors that are coming up, and, I'm sure a lot of them are seeing these same things where they're like, this is not how I would want to experience this. So this is not how I'm going to structure what I'm doing. Are there particular things that you found, in terms of people who've been using your platform successfully, besides the, having a really tight process and it being more about personal brand? Are there other things that were like unexpected that you've seen in the past, like 6 months to a year, from advisors who have been particularly successful on the platform, or just what you've seen in general of things that have changed that maybe surprised you?
Just a slight interruption in this conversation. I wanted to bring to your attention two things that are important for you to know. So, we're always at the mercy of social media algorithms. So, if you can subscribe to the show, that would mean a lot to me. Even more to me if you can leave a rating and let me know what you think about it. But we have a new newsletter that's coming out. It's going to be very active in 2025. That is specifically around tax issues that I'm seeing advisors face in their own practices, changes in legislations, and the pieces that I think are critically important for you to stay ahead of as an advisor with the new administration. So nearby, wherever you're interacting with this, will be the link of how to sign up for our newsletter. Also nearby will be the link to my LinkedIn, which is the best way to get in touch with me, learn more about what we're doing for advisors in the tax strategy and compliance work that we do, and also to get access to the various tools and interviews and things that I do, specifically designed to help you improve your practice, improve your own tax situation, etc. So let's get back to the episode, and thanks for tuning in.
It's funny you bring this up, because literally my co-founder and I were having this conversation earlier this week. And one of the surprising metrics that we're seeing is that there's this, for lack of better words, there's this stigma that young people don't want to pay for financial advice. And that advisors are like scared to like ask for payment. They're scared to sell. They're scared to like pitch. And I know it because we track conversion rates like on our platform, and we've removed 65 plus firms. And it wasn't because they're not great. It wasn't because they didn't get through our process, but it's because some people are just scared to kind of make the ask. And I think this kind of falls into an industry where financial services has been given so much scrutiny, and this generation has been sold to it like every stage of their life. So there's like this mentality that they're so quick to say no, that some advisors are not willing to just enter a meeting, and some say to themselves like, hey, like, you're not a good fit for me. Like, this is, and that surprised me, because you would think that in an industry like financial services, it's like, take whatever I can get, right? I'm using this platform Habits to get in front of new audiences, these Henrys, these DINKs, like, let me get in front of them. But we've had advisors where there's an incredible opportunity, and we emailed back and we're like, so why didn't you end up wanting to work with them? Like, why'd you turn them away? And they said, at the very end of the day, like, I just didn't see it as a good fit. And I think it's because a lot of advisors are looking at their practices as a lifestyle thing, less as a, let's acquire as many families as possible and scale this thing out of the wazoo and get acquired by a private equity firm down the road. Sorry, that's a little bit of a tangent, but hopefully that makes a little bit of sense there.
Yeah. So you've seen the firms that are looking to grow and scale, and not, oh, this person seems like they're going to be kind of an annoying client, I don't want to take them on. Is that kind of what you're saying? Like, can you elaborate a little more?
Yeah, I would say they probably say yes to as many people as they say no to. And it could be niche. It could be a vibe. It could be for the sole reason that they say to the family, hey, give me a call in like 5 years. But it's just it's taking full ownership of your business and not being afraid to either make the ask or to say no. Because at the end of the day, it's your practice, and if you're not going to take ownership of it, then who is?
Yeah. So basically, like, have you been seeing them, unwilling to like just make the call of like, nope, this is not for me, versus you're a good fit, like, let's work together. Like, they're too afraid to ask, basically ask for the business when people come on, and like just kind of not engage? Or
yeah, I'll give like two quick examples. So we had one firm on our platform. They're a top 100 Investopedia advisor. We love having them. They are strictly hourly. That's like all they really offer. And they originally came in onto our platform because they're like, hey, we have no minimums, asset minimums, or income minimums. And they came to us and they're like, hey, like, in the last 8 meetings we've had in the last like month or so, we've had like a lot of pro bono calls, but we've honestly just been turning more people away. And it's like, well, then maybe your niche isn't no minimums on income and assets. And maybe you turning people away is a good sign that you're now focusing in on who ultimately is going to cover your bottom line. But on the flip side, right, we have an advisor who never offers hourly, and has a minimum of 500K investable assets. Within their first, month on the platform, they acquired a family that has like 1.4 in investable assets, young family in their early 30s. It's a great success story for us. And the family kind of indicated to us like, hey, we're going to work with this advisor on an hourly basis, because literally on the phone, they said, hey, I don't normally do this, but I know that we're going to do good work together. We see one another working in the long run. Let's make this work. I'm going to make the ask of work with me, and here's how I'm going to make it work for you all. And it's like, right, here are two different ways in which that people made business decisions while on a call with a family, and just made a gut reaction based on how they want to run their business. So hopefully those are two kind of clear examples, at least within the Habits platform, that we've seen within the last, little recency bias in the last month or so.
Yeah, no, that's really good feedback. Because I think that's something too that at least I see, like there's that balance between you want to pre-engineer your firm a certain way for things to go a certain way, but then at the same time, it's like, well, what's the actual end outcomes that we're trying to drive towards? And yeah, you can kind of create, you want to have the train on the tracks, so to speak, but at the same time, it's like, oh, well, if this is actually going to drive forward the mission, but maybe we have to do it a little bit differently. Finding a way to be somewhat balancing those things. Yeah, that's a really good.
Well, Catherine, it's like very similar to like what you do for financial advisors, right? You're an advisor for financial advisors, right? And I think for a lot of financial advisors, they have these preconceived notions of like, this is what I do to got to be successful. But sometimes, you're not going to have 1,000 clients. If you're targeting for like that, maybe that 40 or maybe upwards of like 125, those are hand selected families that you're choosing to work with.
Yeah, absolutely. And so I think a huge component of that, and this is definitely true in my firm, is, at the end of the day, like when you have those conversations with prospective people that want to come into your practice of just, okay, do I believe in this person? Like, am I going to ask my team members to believe in this client and to like want to work towards their success and like care about them? And I think for advisors, realizing that, yeah, your firm should be structured the same way. It's like when you're having those conversations with prospects and it's just like, do I care about this family? Like, do I actually want to help these people? Are they good people? Like, are they, do we vibe? Like, am I going to be looking forward to my conversations with them? Like, am I going to, especially for the advisors who are trying to grow and scale, like this was a conversation I was having recently with another, advisor about, like you're basically in two lines of business too, between, once you get to the point where you're growing and scaling and you have a team underneath you, it's like, do you have clients that are appealing enough that an employee would be excited to talk to them? Because at the end of the day, it's retaining that employee is actually the bottleneck and the essential thing in the business, not so much the client. Like the client is the downstream, but if you can retain, if you're making sure that you have a nice ecosystem population of good clients that are a joy to serve for you and that there'd be a joy to serve for an employee, that's how you're going to retain that employee. Like that's how they're going to stay, and that's how you're going to grow. Like, because if you can't keep that employee because you have nasty clients that you've picked up, you're done. Like that person will leave. You're going to get stuck with all the service delivery. Like things are just going to fall apart. So I think it is important, it almost sounds like a very millennial thing to say, but it's like, you do need to be really picky on who gets on the bus, just because it's not right now, it's you driving and you might be the doormat, but if you're going to grow this thing, you're not going to be the one driving. Like you're going to be having to have somebody else willing to drive this bus. And if you've populated with like insane, people, like no one's going to sign up for that. Especially in the current labor market.
Oh, sorry. Well, I was going to say like I think one of the most difficult parts about being a financial advisor in this incredibly crowded and fragmented space, right? You can look at the Kitsy's map, once a month, and you can quickly be overwhelmed by all the available tools and options at your disposal. And so financial advisors are not only having to be advisors for their clients, right? Like that's ultimately what the bread and butter is, but they're also the CEO, they're the CTO, they're the CRO, even at times, they're having to be a borderline CPA and an attorney, right? And so obviously, this is, I guess, like a shameful plug for you and as well for services like Habits, because I think one of the stigmas that financial advisors face is they really want to have ownership of everything. And it's also really hard to know like when to delegate and how to delegate. And obviously
Yeah.
teams vary and structures, depends if you're independent, if you're at a broker dealer, or if you're at a larger or smaller shop. But for the most part, advisors run their book, and, you kind of have to be stubborn, but you also have to be reluctant to ask for help at the same time.
Yeah, no, that's absolutely true. So for people who are looking to learn more about the work that you guys are doing, best place to get in touch, usehabits.com. Like where would you like me to send, us to direct people to?
Go to www.usehabits.com, but also I guess like shameful plug. I think one of the cool things that we do is that we build totally in public. So, I run a blog that is published weekly, Jack Boudreau, Jack_Boudreau_. We got like tens and thousands of followers across TikTok and Instagram. If you want to know what we do, how we do it, we wear our heart on our sleeve, and we're authentic as hell. So if you really want to know what's about going on under the hood, those are the easiest ways to figure out how. But usehabits.com is a great place to start.
Yeah, that's great. So I want to thank you again for joining me on the show, Jack. And for advisors listening who are interested in what Jack's building, we'll post the links to those nearby. Any closing thoughts before we sign off?
Ooh, closing thoughts. When in doubt, just shoot me a DM. It will actually be me responding. And I've spoken to 1,500 plus financial advisors. I've spoken to over 2,000 plus millennial families. At a minimum, would love to learn more about the advisor, or I'm happy to share any funny story because I've heard them all.
That's great. No, and I'm the same way too. I always tell people like, send me a DM. Like, I actually just want to talk to you. Like, cause that's how you learn. It's like, it's the things in the, like the, by the way, kind of conversations with people that you just learn so much, where you get a resource, or you give a resource, or give a name, or get a name. Like it's those human connections. And it's that kind of ties back into kind of the whole, the whole conversation of, if you're building a practice and you've built kind of who you want to serve, you've built that personal brand of who you are, what's going to make people want to connect with you. It's not the commoditization, it's the personal relationships, it's the actual people.
Yep.
And so, finding the same thing in your life in the professional relationships that you have. And it's like, it's about people at the end of the day, and it's those personal connections. So you can send us both a DM and tell us how crazy we are, or
I love it.
We'll get the feedback. But yeah, I want to thank you again, Jack, for joining on the show. And for advisors listening, like I said, those links will be nearby. Always interested in getting your feedback on what you thought. So send me a DM and tell me what you think. But anyway, thanks again for listening. This was another episode of the Financial Advisors Want to Know podcast.